Welcome back to The Dive. Our guest today has 20 years of royalty and stream financing, M&A, and corporate finance experience. He will deep dive into the international carbon trading market, tokenized carbon offsets, impact investing, carbon myths, net zero approach, as well as the company's financial and project updates. He is the director and CEO of Carbon Streaming Corp. Justin Cochrane's joining us today. But before we bring him on, just a quick reminder to smash that subscribe button if you haven't already. Hey Justin, welcome back to The Dive.
Thanks, Cassandra. Nice to be back.
Yeah, it's nice to have you back. So Justin, after 6 years, leaders at COP26 have reached a deal to standardize the international carbon trading market. Some estimate that the new UN supervised marketplace could be worth as much as $100 billion. So what does this mean for the private carbon industry? Do you think this will spill over into offsets?
Yeah, absolutely. I think the fact that we now have general agreement between governments anyway as a starting point is a tremendous vote of confidence in carbon markets and the value of carbon markets worldwide. And governments know that in order to facilitate the kind of capital investment that they want, they need the private markets and specifically the voluntary markets to play a major role. So we see this bringing a ton of confidence into the sector. The concept around corresponding adjustments and removing double counting, we think will be a huge positive for the voluntary market. So we're pretty excited about those announcements.
Absolutely. Okay, so last week, Mark Cuban announced that he has been purchasing $50,000 worth of tokenized carbon offsets every 10 days and hopes to do even more. Per our research, he is using blockchain technology to purchase offsets. How do you view this type of new standard? And could carbon credits become the new crypto craze?
Yeah, I mean, we do see a number of investors in addition to Mark Cuban who are participating by buying what I'd call sort of lower value, sort of pure carbon credits. And we think this has been a sort of tremendous new source of demand. But as companies, and there's a handful of them that are looking to tokenize carbon credits, again, I think it's fantastic for the industry because it brings in confidence, it brings in transparency and liquidity into the market, which this market has lacked for the past decade. And so I think all of these things and new names like a Mark Cuban participating in the carbon market, I mean, that's fantastic just in terms of building recognition for the voluntary carbon market. So we were pretty excited and enthusiastic about that announcement. And absolutely, I mean, the carbon market will be multiples bigger than Bitcoin. Certainly in potential to be bigger than oil when you think of what we need to accomplish over the next couple of decades.
Okay, so in one of your carbon blogs, you mentioned that the company is focused on impact investing. Do you think impact investors can benefit from the recently approved infrastructure bill?
Well, yeah. I mean, when you look at where carbon projects are based, there's an opportunity to have those carbon projects developed in conjunction with infrastructure investment. And so we look at that, that type of green investment, green infrastructure bill as a massive positive. The reality on the impact side is a lot of that happens in the developing countries and developing nations around the world, but not to say that even in North America, these projects can have a massive positive impact on local communities and in terms of protecting biodiversity as well.
So what are some of the biggest myths you hear when it comes to carbon, and what needs to happen in order for these to go away?
Oh, I think the biggest myth that we hear is that all carbon credits are greenwashing and that you're just allowing a polluter to continue to pollute. Well, where in reality, what you're doing is you're moving capital into projects that are helping fight climate change, knowing that the the change from today to a low carbon future is going to take time, and in some cases likely to take 3 or 4 decades. And in the meantime, you've got to have capital being directed to projects that can help fight climate change. And in order to fight climate change, we need to throw everything at this in the kitchen sink, right? So supporting these types of projects is critical to our efforts to fight climate change. And suggesting anything else just doesn't seem right.
Mm-hmm. So we often hear offsetting and the net zero approach. From your point of view, what is the best approach to achieve this goal of net zero carbon? Should companies prioritize avoidance, reduction, and removals?
Well, companies should not avoid anything. Again, going back to the last question, we sort of have to throw everything in the kitchen sink at this issue. So the best way, and the way we're going to get to net zero, is to have industry reduce emissions, reduce their carbon footprint, and at the same time, for those emissions that they can't eliminate today, support and buy offsets to support this industry. And so we need removals, we need avoidance credits, we need reforestation, conservation, renewable energy projects around the developing world. And so we really need to throw everything at this if we want to get anywhere close to meeting our Paris Agreement commitments of limiting global temperature rises.
Mm-hmm. Okay, makes sense. So let's talk Carbon Streaming Corp. The company announced its quarterly financial statement with $108.6 million in cash and no corporate debt. Where do you intend to use this capital?
Well, so that largely comes from a private placement we completed in July. What we've done in the meantime is built up an investment team that now has 6 people that spend 100% of their time building out the investment pipeline, negotiating, executing due diligencing deals. And so we're using that cash over the next 6 months to add to our investment portfolio. We'll be announcing a number of new transactions, we hope, at the beginning of next year. And we're incredibly excited about where the pipeline sits today. It's over $700 million in size, over 80 different projects that are in that pipeline. So pretty excited about what the next 6 months have in store.
Lastly, the company recently closed the previously announced blue carbon credit streaming agreement with Marvivo Corporation for the Marvivo project in Magdalena Bay, Mexico. Can you walk us through the project and what does this mean for the company?
Yeah, absolutely. And I actually had the pleasure of visiting Mag Bay just last month. It is an incredible project. Very excited about what this project will do over the next 30 years, seeing the potential impact that it can have on the local communities and protecting the mangroves in Magdalena Bay. Very, very excited. They've got a tremendous, so this is the Marvivo Corporation and Infinite Earth that had developed the Rimbaraya project. They've got an incredible team that they've put together and assembled. They'll be validating and doing all of their carbon work here over the next 18 months. We hope to have first credits issued from that project in early 2023. And because it's a blue carbon project, so here you're protecting a marine ecosystem at the same time as you're protecting the mangroves, we're seeing tremendous interest from buyers in this project. We've seen the price almost double from where we originally invested this in earlier this year. So we're very excited about this project and happy to finally get it closed.
Awesome. Well, thank you so much for coming on today, Justin, and giving us the update.
No problem. Thanks very much for having me again.
To our audience at home, thank you so much for tuning in today. We'll be back again tomorrow, so you might want to turn that notification bell on and smash that subscribe button so you don't miss out.